noticed that investors love to categorize, sort, and group different investments? Small versus large, growth versus value, US versus international, tech stocks versus financial stocks. You may not realize it, but in 1999, the S&P 500 adopted the Global Industry Classification Standard, which categorized each stock in the S&P 500 into 11 different unique business sectors: technology, financials, consumer discretionary, consumer staples, communication services, healthcare, industrials, energy, utilities, real estate, and materials. Today, I'd like to discuss the smallest and perhaps most ignored sector of the S&P 500, the materials sector. We can break this sector down into a couple of different industries, such as mining and metals, chemicals, construction materials, paper and packaging, and forest products, such as lumber. The materials sector has been one of the worst performing sectors in the market over the last 15 years. But that hasn't always been the case. There are reasons to believe that the materials sector may rise from the ashes and see their glory days yet again.
We hear a lot about artificial intelligence and these massive data center construction projects that are happening throughout the country and really throughout the world. As you can imagine, all of these projects require a lot of raw materials. Things like copper, lithium, iron, steel. Various rare earth materials are required for modern technology and computer chips. That increased demand could create additional demand for raw materials, and as you can imagine, keep prices elevated.
Many of the raw materials that we use in construction come from overseas, especially a category known as rare earths. Tariffs and supply chain issues, while frustrating to many, could create some additional scarcity, which would keep raw material prices higher than usual. This could also create a lot of volatility in the sector due to stockpiling of assets and changing tariff rates.
Most investors are anticipating a decline in interest rates before year-end. This could bode well for stocks in the materials sector, which tend to carry large capital costs for mining and production. A reduction in interest rates could make long-term projects more viable. In addition, changes to tax law provide incentives and tax breaks for construction projects, which should only drive demand for raw materials.
The U.S. economy continues to move towards a tariff-heavy protectionist stance. This could add an element of scarcity to raw materials, coupled with the increased construction demand, which could lead to higher prices and ultimately larger profits for stocks in the materials sector. In general, the materials sector is under-owned by most investors, but a case could be made that material stocks will see brighter days ahead. As always, we appreciate the continued confidence and trust and look forward to talking with you soon. Thanks so much.